Jeff, what do you make of sort of the tenacity of the bulls here in the face of these rising case numbers in some states? And then, as some are pointing out, what does that mean for reallocation as people rebalance at the end of the month? Does that mean that we might be we might be due for a dip in the short term?
It's possible. I think what we're seeing, fortunately, is not really a second wave. It's still just an extension of the first wave in some of those states and countries where we're continuing to see a rising number of cases, whether those are across the Americas. It's not just states, of course. We're seeing it in Latin America. We're even seeing it in India. But these are still first waves. So the market is not yet pricing in a real second wave, just a continuation of a first wave in a number of countries. It's good to see. We haven't seen a second wave in those countries that seem to have conquered the first wave of the virus. As we look to the latter part of this week, there's potential for a lot of volatility here as the market battles those positives with some of the improving economic data with a very weak labor market, with a market that's already priced in an economic recovery. And of course, the Russell rebalancing on Friday can bring a lot of volatility and dislocations to a market that's already started to see a return to much more volatility. So I think that rebalancing, along with the MSCI country classification changes that could come this week, could bring some more volatility.
Yeah, there's a lot of chop embedded in all of that. Kristen, how about you? I mean, New York's phase 2 is going to get a lot of attention today. We'll see how much pent-up demand there is to get a haircut and go to dinner. How do you weigh that versus what Kudlow told us this morning about a potential rescue package, a continued rescue relief out of Congress, and then the rising case numbers in the South?
Yeah, so I think you have to keep an eye on the rising case numbers. This is something that we're closely tracking, and this is really going to be the determinant of volatility in the market. So at Citi Private Bank Index, which is looking at the largest metropolitan areas, studying that week over week caseload, so the increase in infection rates, which you should anticipate as a reopening. The one thing to keep in mind, though, is to understand whether it's having a toll on the medical system and understand what states have it under control. So that week over week change is going to be critical. In terms of the overall market performance, though, I do think we need to back and still look at what is driving the market performance thus far. So we divided the world into what we call COVID defensives and COVID cyclicals. COVID defensive stocks are those sectors and industries that have actually held up really well throughout this pandemic. E-commerce, the major sectors that have benefited, and then cyclicals are the ones that have been hit hardest. The majority of the performance in the market, 70% of the S&P 500 market cap, are those COVID defensives. So the behavior starts to be a little bit more rational.
Yeah, Jeff, just in terms of that recent rotation we have seen into cyclicals, how do you think about that? How sustainable is that? What are the risks to the market as we do see these shifts underneath the surface right now?
From a U.S. perspective, it may seem premature to see an aggressive rotation into cyclicals given the damage to the labor market. But if you look outside the U.S., the labor market's actually holding up really well in Asia and in Europe. In Europe, you may only see about a 1% or so rise in the unemployment rate this year in countries like Germany, France, and elsewhere, which is really encouraging. And that's one of the reasons why consumer-oriented cyclicals in Europe are outperforming U.S. companies here over the past month. That's something that could continue. Many investors are underweight international equities given their underperformance for the last decade or so. That could be starting to change here as cyclicals begin to perform, particularly international ones. That's leading to outperformance by international markets here. Again, and really what has been the second half of this rally off of the lows, that could continue.
So does that mean that you like international stocks better than U.S. right now?
I think you should at least have a balance. So I think when you take a look at your portfolios, again, it's easy to have been underweight any international exposure. And I think that's a risk here. The U.S. is very overweight tech and healthcare. They've done very well. They've been defensive, sort of the COVID defensives that we just talked about. But the cyclicals could be making a comeback here if this rally remains intact. And that could mean leadership by international. So looking at your portfolio, make sure you have adequate exposure there back to your baseline weighting is pretty important right now.